Good morning, traders. Today is April 1st. And no, I'm not going to be playing any jokes on you guys today. My name is Brad Matheny, and today is the MENT, or this is the MENT Investor Update video. This is the free video that I post on YouTube to share with you, to talk to you about what I expect to happen in the U.S. and global markets over the next 10 to 15 plus days, maybe a bit longer. Boy, what an exciting week, but I want to first remind you to please come to MENT.com Technologies. Check out what I do. If you haven't been following me lately, I've been nailing the market trends. Last week, I warned everyone that technology was going to bump and bounce higher. I called that it could move 15 to 20% higher, dragging the SPY 7 to 9% higher. I've been calling on a technology bounce for about 45, 55 days. It's been just incredible. If you really go to my YouTube channel and follow some of the research that I've been doing, giving you guidance as to what to expect in the market and where opportunity is setting up, what to expect going forward, particularly with regards to the technology market, the SPY, the QQQ, gold, silver, metals. I mean, it's really unbelievable. In fact, I'm getting messages from followers on Twitter and members that are saying that it's really unbelievable what I'm capable of doing. My SPY cycle patterns, let me get those real quick. Come back over here. My SPY cycle patterns have been phenomenally successful. The biasing trend over here that members get tells you the daily bias, which is a proprietary bias. The weekly bias is again proprietary. The long-term trend, the price action, and the short-term trend are designed to show you what is actually taking place with regards to price trending. This is modeling, takes place after the actual day sets up. So this is on Friday morning. I generated this before the market opened. We were expecting a gap potential in bullish trending, bullish biasing, bullish long-term trending, explosive price action, and bullish short-term trending, while the gap potential trend or pattern occurred in a trending mode instead of a counter trend mode or a carryover mode. A carryover mode is essentially a kind of a coasting mode, meaning that instead of trending, building momentum, carryover is it's carrying momentum from the previous bar or from the previous trends. And this is exactly what happened. I mean, this week was beautiful. Every single bar pretty much set up perfectly. Even though the breakdown bar on Monday didn't actually occur, we had a little bit of a breakdown on Monday, then it continued higher. Then the momentum rally on Tuesday set up late, carried over into the Wednesday pattern. Gap up lower, which did occur. Thursday was a topping pattern, which understand that's setting up a resistance area, rallying into a peak, and then the gap potential carried over even further. What a beautiful move in the markets. But again, let's get started back over here. Remember, come join the Expert Growth membership. I'm urging you to support my research. If I'm helping you and you believe my research is valid and it's benefiting you, then come join Expert Growth. You get all of my services in one membership. It's about $54 a month, $55 a month in a monthly subscription, or you can get discounts here. You can also get a 60-day trial for $35, which then starts billing you at a regular rate. Understand the idea here is to help you and to make you a better trader, giving you the information you need to make your own decisions. So again, as we talk about this, I want to highlight the features that I deliver. Clear price trend analysis to help you manage and set your own goals. I do the research, you make all the decisions. Simple and to use and follow. Just watch my video analysis and read the weekly custom index reports. These are for members only. Multiple proprietary strategies and trading systems deliver new trading signals every week. I try to highlight you as to where the opportunity exists, but you're capable of using my algos to make any decisions you like. And again, you get the MENT rotational modeling system, you get the custom indexes, you get multiple algos, both daily and weekly. You make all the decisions and get all of my research, all of my updates, all of my information for one low price. My goal is to help you navigate the next 7 to 10 years plus to become a better trader, to protect your capital and grow your wealth efficiently. I don't know of anybody else who is capable of doing what I do. I've been studying the markets for 25 years. I am not a billionaire. Someone wrote me the other day, said, with what you know, you should be on an island somewhere. The fact of the matter is, guys, I have been developing code for the past 25 years trying to find and hone in on the best predictive tools. Now, yes, I have my own trading systems. I do trade on my own. I am focused on swing trading and day trading. I do keep some things private, but understand that a lot of the things that I develop are still in the works. What I'm showing you are things that, you know, are suitable for public consumption. In other words, they're not my proprietary day trading systems or my proprietary private systems. They are essentially the swing trading and day trading models that are available to everyone to try to help you make better decisions. So let's get into it. Visit MENT.com. This is me. I've been doing this for a long time. MENT.com has everything you need to get started. And again, this video is to try to help you understand what's going on in the market. So first thing we're going to do is take a look at this chart, which is the SPY right here. And you can see the explosive move to the upside. Now, this is one of my primary charts on eSignal. I called this trend here a tagging of the apex. I called it a couple of weeks back saying how critically important it was to see this rejection occur at this level. We were in a severe downtrend, the banking crisis, and then we had this rejection on very high volume. This was a critical reversal pattern here. It formed a three-river morning star formation, which was a bottoming formation. Then we apexed back out over here. And I wanted to highlight these two channels. This was the primary channel that I drew. This is a secondary channel off of this high. Once we apexed back over here, we got this big breakout. And oh my gosh, what an incredible move. I can't tell you how many people were, still believe that the markets are going to tank. And that they're trapped in this move after watching, I hate to say it here, but this was a $10 move on a, let's just take a look at how far it broke from this apex. 13.73 roughly on the SPY, and this is going to be a huge percent, 3.47%. The shorts are really under some pressure here, and I'll tell you what's going on. So we had a general U.S. banking crisis, which likely led to, which you're well aware of, probably the Credit Suisse and the Deutsche Bank crisis. Those were the two publicly known moderate crises taking place over in Europe. But I believe there's a bigger crisis event taking place throughout much of the rest of the world with regards to the slowdown in consumer activity and spending that is perpetuating this kind of stagflation period. There's still a ton of money out in the world, okay? There's a ton of wealth that's been created over the last 7 to 10 years. There's a ton of money out in the world, and what's happening is that money, that capital, is seeking safety and security and the best ROIs possible. In a world of stagflation, where asset values have been blown up, so to say, over the past 15, 18 months since COVID, and contracted, so this capital has to move into what it feels is the safest, most secure, capable ROI environment on the planet. And I believe that capital is moving into U.S. equities, and I believe it is also moving into metals And I believe that the new technology wave that started prior to COVID really kind of kicked into gear around, let's call it 2016, 17, 18, is likely to be the next bubble cycle over the next 4 or 5 years. Large caps, technology, consumer staples, healthcare, along with biotech and basically anything involved in a technological revolution, improving healthcare services, improving consumer services, is likely to benefit. And because of that, like I said, I believe capital is rushing into the U.S. markets. You can see this very heavy volume here near this bottom. And in fact, if we take a look back here, you can see the amount of volume that rolled over here and rolled over here. We're getting very heavy volume back down here near these lows. We saw a bit of accumulation here, which was some early accumulation in this area. Then we weakened through this trend. But this deep low, you saw a lot of volume taking place. And I believe what we're looking at is a capitulation bottom here. You can see the higher lows that are taking place through this area here in the SPY chart. And I believe that's going to give us a very strong opportunity to see the SPY move up here to the 425 to 435 area, which I've been calling for to happen for at least 60 plus days. Since way back over here when I was looking for a wave 4 bottom, which occurred back down here in this capitulation area, I kept telling everyone that the SPY is going to migrate up through probably a wave 3 structure. I believe we've seen wave A, wave B, now we're moving into wave C to 425, 435 area back over in this area. In fact, I believe I have a, yep, right over in here. This is the area that I drew right here that highlights the move I believe is going to take place in the SPY. Okay, so now let's go take a look at some of the other technical indicators. So essentially what we have right now, ladies and gentlemen, is we've reached around the 410 area. We're going to probably find some resistance in this 410 area, 410, 411. So understand that next week we could get a pop-up, maybe to 415, 414, and then maybe some contraction. That's going to be expected before we start to see some upward movement again. The SPY will, in my opinion, eventually attempt to move above 423, 424, and that's where we're going to potentially see some topping. We have big resistance right over here in this green area, 426, and then a bigger resistance area back up here, 432. Once we get up into this red resistance zone here, up above 410, then I think it's going to be a bit more labored for the SPY to be able to move higher. But I believe it's going to continue to move upward into this 425, 430 area before it peaks out and stalls. Okay, so let's come over here and take a look at some of these custom indexes. Custom Innovation Index, this is one of the things that the members get, has bottomed back off of this area. I indicated way back here as we were moving lower to get ready for a big move in technology. This prompted a 40% recovery move. I mean, it's just a beautiful move. And now we're in this new phase here, back to the upside. Can we go higher? You bet you we can. We can probably end up in this 85, 90 area over the next 45 to 60 days, possibly prompting another 20, 25% move in technology if my analysis is correct. So be aware that technology looks like the real big winner right now. This is the fear index. Fear index had heightened through the banking crisis. It has rolled over now. It's at 8.72. We need to see it get down below this 8.0 level. This would be very healthy, back below this lower channel. We're still bullish on the SPY. This is a simple SPY chart with a super trend indicator plotted on it. And then we have the custom market sentiment index. As I mentioned to you, we could see, just like this area, rallying up into this upper green area, middle upper green area, stall, upper green middle, upper middle green area, stall, upper middle green area, stall, upper middle green area, stall, while the SPY continues to trend upward. We've seen that occasionally back over here. Now we're up into the middle upper green area here. I think we're going to just basically do this for the next 12 plus months through the election and into the early, let's say 5-6 months prior to the 2024 election. And I believe we're going to see a pretty solid upward move in the SPY. We may see a 15 to 20% move, maybe attempting to get above new highs, kind of like right here, which would put us back up over here by, say, January, February, March 2024, and then we'll probably roll over into the early election period, call it May, June, July, August of 2024, before we get right into the election and we start to get some clarity, which may prompt another move to the upside. So be aware that even though the markets seem rather fragile, there's a very good chance that we're just looking at a settling market that is going to resolve into a bullish trend, and that could give us a lot of opportunity moving forward. Okay, next, the U.S. Valuations Trend Index monthly chart. I had mentioned last week that this is very key that we see some sort of a confirmation pattern. We ended March with a nice engulfing bullish pattern here. It's actually beautiful. Get a little harami pattern, an inside out down pattern, and then a engulfing bullish pattern. Absolutely beautiful. Very similar to what happened here, or kind of like here. But this engulfing bullish pattern, like here and here, this is actually an inside out up. But this engulfing bullish pattern here is a very solid indication that true valuation may start to move higher. Now understand that true valuation of the U.S. market, it does not indicate a momentum trend, does not indicate that we're now in a bullish super trend or bubble like we saw back over here. What it indicates is that we're beginning to build a base and build momentum in this trend. Eventually we'll move into some real price appreciation phase back over in this area, but these initial 5, 6, 7, 10 months is basically building a base, shutting out the doomsayers, moderately volatile. Remember, this was 17, 18, 19. So remember in 2018 how volatile the market was. So understand that we've got some volatility setting up over the next 7 to 10, maybe 12 months before we get into a real momentum move, which is why 2024 is a great opportunity. And in fact, there's one time frame in 2023 that I believe will be the absolute best buying opportunity of your lifetime over the next 10 years. So we will see how it plays out, and I'll keep you updated. But right now, the U.S. Valuations Trend Index is basing and bottoming and looks like it's shifting into a new accumulation phase. That means that we're going to start to see some real stronger upward bias in broader sectors. And I would prepare you urge you to prepare possibly taking advantage of what I call small anchor positions in some of the likely best performing sectors over the next 6 to 12 months. You might be very surprised. For example, I had a talk with my fiance just a couple of days ago, and she repositioned her retirement account based on my expectations. She's already up 11% in a week and a half on her retirement account just by repositioning for this big explosive move. So there's some real opportunity here if you know where to look for it. Okay, next we have the Metals Trend Index. Okay, everybody's talking about how gold and silver are moving substantially higher, which they are. I have been calling for this to happen for many, many months. You can see my custom Metals Trend Index indicated the bottom really occurred back here in September. We've rallied up. We've just pulled back through this period, which is early 2023, which was to be expected, and now we've seen a rally phase here. We just got up to new highs back over here, guys. So this is not, think of it as this is a proprietary index of metals. What's happening now is we are stalling for the last phase of the move, which will take us up here to 13,500, which will put gold above 2150 and silver probably above $30, $31. And that is going to be the end of the move in gold and silver for a while. Maybe we get up here into this 13,873 level, which is a full 100% Fibonacci extension, but this is the area right up in here, 13,500 to say 14,000. That's where gold will stall out and begin to consolidate into a downward trend. I've mentioned this over and over again. So we still have a move here, maybe 100, maybe 10 to 14% in gold and silver before I believe it's going to peak, and we're going to move into a sideways stalling pattern for a period of months. And that could last all the way into maybe October, November, December, January of 2024 before it maybe starts to move a little higher. I will tell you this, that we are in a decidedly upward trend for metals, but there are going to be periods where metals look unfavorable. In fact, I believe after we reach this level up here, I believe we could see, which would be again 2100, 2200 gold. I believe gold's going to fall back down to around 2000, maybe just above or just below 2,000, base bottom, and then start the next move higher. So you're going to get another opportunity, in my opinion, to acquire gold maybe below 2,000 again over the next 6 or 7 months. But again, we are in a new upward trend. We've almost exhausted this trend. Right now, you've got about maybe 10, 14% upward in gold and silver here, which is great. But then be prepared. You're going to see a stalling pattern take place over here. All right, now I wanted to come to the charts. This is gold, and I'm going to show you what I believe is likely to happen. I'm going to try to draw it for you. You can see we've broken out of this channel, so we have this move up to 21, maybe 2200, and then we stall, and then we base back down here, maybe around 2000, and then we will likely attempt to find some sort of support. Let's figure out. Okay, I've drawn it a little wrong. Let me redraw. So this is going to move up to about here, June, maybe a little higher, and then stall back out into the beginning of the year, end of 2023, and then by 2024 we will be basing and moving back up into the next phase. That's what I believe will happen to gold. We will set this new high, we will stall out around 2150, 2250, somewhere around there, roll back down around 2000, find our basing, bottoming, rebuild our momentum back in this area, and launch into another phase higher. The total phase here for gold should be similar to this, and would likely, if my analysis is correct, put the next phase target of gold. I've done this many times, but I believe it's going to be about $2,700 gold, which could expand a little bit higher. These waves will start to get a little bit bigger as the appreciation cycle expands. So we could theoretically end up in the 26 to 2,700 area of gold, and that would be possibly around October, November, December 2024. Could be correlating to the election event, the uncertainty around the election event and what's taking place in the markets. Okay, let's take a look at silver. Silver, I've kind of done the same thing. Silver will, excuse me, play catch up with gold. So if gold stalls out around the 21, 2200, silver could rally up even higher, carrying out into a trend that is lagging gold and could extend upward into a mode that is slightly lagging gold. So silver is now starting to play catch up with gold, which is great to see, but silver will lag. Silver will not appreciate to the same level of gold until the mass appreciation of metals starts to take place. And I don't believe that's going to happen until 2024 or 2025. So at this point, I still believe we're going to see the $30 to $31 peak area, and then we're going to stall out. You may see an opportunity to pick it back up around 26, 25 back in May, June, July 2024. But then the next phase in silver is going to be quite explosive. So if I were to see this Fibonacci extension from here to here to here, assuming my drawing is correct, we are going to be looking at a 100% expansion at 39 and a 150 at 45. So you have very clear targets for the next expansion phase up to here or up to here in the next phase of the expansion in silver. So you've got a very good opportunity here. Buying down at these levels is still very opportunistic if you're a long-term holder. You know, I hate to kind of say it, but I started accumulating way back over here in 2014-15 when I could get it at $13, $14 an ounce. Long and short of it, this next phase in silver and gold is very explosive. We just have to wait for it. We're not in that big expansive move yet. That's going to come in 2024, 2025, and later. Okay, this is really a good solid breakout trend. It's going to roll up to around $29, $30, $31. Silver will, and then roll back downward to around 26, 27. And that's just normal price volatility. It's going to be setting up an accumulation phase here for the next expansion phase to the upside. SPY, again, this is my chart that I share on Twitter with everybody. Let me go down here to 1 hour. So 1 hour chart was beautiful in how this set up. I've been sharing this on, okay, I've got to move this over a little. Get the actual price data in here. You can see how we called this apex level. I called this gap zone here, this area here. I called this resistance area and this support area. Back over in this area, this is where we started. I started warning everyone about a potential breakout to the upside. I actually have been warning for quite some time, but we had gone back into this flagging area, and then we got this big, massive breakout. We blew through our resistance area. I told everyone the 403 to 404 area would be our target. The next day it hit that target. Then the following day on Friday, I told everyone essentially 407 to 409, where I drew this ellipse up here, was going to be our upside target, and look where we ended up. So now this becomes critical resistance. I think we might get a little above this early next week, maybe up into the 410, 411 area on an early pop on Monday, Tuesday, then roll back over and try to find some support near 404, 405. But the SPY is in a solid upward trend, and if you know what to do with your investment and retirement account, you would be moving capital into potentially hot sectors over the next 60 to 90 plus days. You don't have a window beyond May, June, in my opinion. So between April 1 and call it June 10th, you have a window for maybe a 14 to 15% gain. Could be very explosive, but after June 10th or so, you need to move your capital back away from risks and sit in for the next correction in the market before we start to see an upward trend. Okay, that about covers it here. I want to again highlight what you get at MENT.com. What I'm trying to do is help you protect and grow your assets. If you've been following my research long enough, you know that the information I'm delivering to you is accurate and timely and helpful. My rule is I don't want to be the one to tell you what to do. Okay, I am not in the business of telling you what you should trade. I'm in the business of telling you where I see opportunity setting up using my proprietary indexes and tools and modeling systems. I want you to be able to make the decisions as far as what to trade. That's the goal. I give you the information, I give you the research, I tell you what I see, and then you decide how you want to trade and how you want to protect your capital. I will give you guidance. I will tell you what I believe is the right allocation level. I will tell you what trends are. I will tell you what I expect over the next 60, 90, 100 plus days. But I want you guys to be able to learn to make the best decisions on your own. I'm not trying to hand you fish, so to say. I'm trying to teach you to become a better trader. And that's what it's all about. So visit MENT.com, go to my website, follow me on YouTube, follow me on Twitter, watch my videos, learn what I'm all about, and let's get ready for the next 5 to 10 years. It's going to be the biggest opportunity of your lifetime if you understand what's going on in the markets. And again, that's what I'm trying to do, is unlock the keys to success for traders and deliver them to you in a timely fashion. All right, guys, thanks a lot. Talk to you soon.